Welcome to this weekly video recap of the Forex market, where I take a look at the US dollar indecision and what could happen next on the Eurodollar, pound dollar, dollar yen, and AUD USD. Before we dive into that though, be aware that this video is intended for a global audience and may not be suitable for everyone. Therefore, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that and conditions and other details. Also, trading for exchange of global financial markets is considered high risk, may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with the disclaimer you can find on admiralmarketsglobal.com as well, and also with the risk involved when trading. Alright, let's start with the pound USD. Looking at last week's candle, this is a weekly chart. You can see a high of 152.40, low 151. So it's only a 140 pip. That's obviously a lot smaller than this 440 pip. So it was a bit of a slow week on the pound dollar, and you can see ended up as a doji with the close near the open. So not much information, perhaps indicating the weakness to the downside considering the strength of the bearish candle the week before. Maybe a retraced bearish candle. Let's take a look at the daily candle and daily chart, and you can see a lot of small daily candles plus actually a bullish candle indicating maybe the retracement potential of this downside. You know, the top obviously is a very strong level, and I would put a fib from top to bottom at the moment, and I would be surprised if, despite the downtrend momentum that we see on this daily chart, that price retraces back to a 61.8 fib, maybe even a 78.6 fib, before down again. When I zoom into the 4-hour chart, of course, that strong fall that happened here since this time, for about, I would say, a good 2 weeks probably to the downside. Now we broke above this resistance trend line, which is an early indication will maybe make a retracement, as I already said, up to, first of all, the 38.2 fib, maybe dip down and go perhaps higher to one of these 3 fibs before ultimately finding a bigger turning spot for a bigger move down. Now, obviously, this is counter trend. So if price were to be able to break, for instance, below this support trend line, let me make that actually intuitive green color, right? If it breaks through this green line, then probably that retracement is not going to happen, and probably the trend will continue. The breakout could see price fall down to 150, 149.50, which is a minus 272 target of this fib. You can see here at the 23.6 fib, right? So that would be the first target. So that could happen if price breaks through green and through this bottom at 151. All right, so that would be the trend continuation potential on the pound USD. Otherwise, if that doesn't happen, a move up to the 38.2 fib seems a bit more likely, like this, maybe a small dip today, back to the trend line, could be a bouncing spot up to the 38.2 fib, which will be a resistance again, in my opinion. Could dip down perhaps again, find support again up to the next fib, and then that could be the bigger turning spot, eventually breaking through the support trend line like that. And when we get the break, it could fall further down. So this is, you know, the potential bounce and breaks, I would say, for the pound USD this week. Obviously, I'm going to keep an eye on this pound and other pairs as well on Tuesday and Wednesday during the live trading webinar and the Forex strategy webinar as well. Tuesday, I take a look at fibs and waves, in fact, and Wednesday at strategy. Nenet has his weekly FX recap tonight on Monday. Wednesday is expert opinion on the London Open system. And together we take a look at setting up your own trading room and your own peace of mind on Thursday. This is the Eurodollar daily chart, and you can see that Friday's NFP candle, in a way, had a lot of bullish momentum in that day, but ultimately fell a lot as well at the end of the day, with a big wick, creating a big wick on that daily candle. Kind of an indecision again as well. The US dollar really is a tough considering all these price actions and maybe the news that is the fundamentals, numbers that are not really adding up to perhaps a higher chance of a rate hike this month. So that chance is getting lower with these numbers. In the meantime, the euro dollar is in the triangle, looking at the orange trend line and the green trend line. A break of that green trend line, in my opinion, would indicate the potential for price to make a bearish break down to 110 and the minus 272 target, down to 108.80 and a 61.8, and also the bigger bottom right in here with this green line. So that would be the potential for a bearish break like that, and then challenge this support line, which could get a bounce as well. Right? Now, if price breaks to the upside, there's a small little intraday space between the 61.8 fib and the 78 and 88.6 fibs, which are still heavy resistance zone. Once this top gets broken, though, there is a bit more space up to 116 probably right there, and maybe 117 eventually. Right? So there's a bit more space to the upside there. Now, ultimately, this price action is quite tight zones. For a bigger breakout to happen, probably the interest rate hike would have to happen this month, and then price would have to break through this green, and then there's that bigger space to the downside where I have the red arrow. Until that happens, price is relatively squeezed in the tighter zone, and all that I'm looking for are maybe smaller breakouts here, and even smaller breakout to the upside. You can see price respected neatly the 50 fib here, and the 61.8 fib as well. So ultimately, if it breaks this trend line, the orange trend line, I'm expecting price to stop at the 78.6 fib too, which could be a turning spot as well, by the way, and maybe a small trade, small breakout trade to the upside. Very small one, as you can see. So that's basically my view on the Eurodollar for this week. Let's take a look at the dollar yen. Kind of a weird day here too. Downside during an FP, but look at that close in reverse and closing bullishly, in fact. Quite a turn of events, in fact, on this dollar yen. Looked like a breakout of this trend line, but is it? With such a daily candle, kind of becomes a bit of a doubtful case, in fact. Price is right back into moving averages. Price is right back where it started, in fact, on Friday. So, there'd be a lot of explanations. It's not very clear in my opinion. I mean, this could be a wave 1, and this is just a deep wave 2. In that case, price should not break above this top at 120.40. It does invalidate the potential bearishness. And, well, for me, really, to say that this breakout has any chance, I would have to see price again push through this 119.50 probably. Otherwise, I'm very cautious with this dollar yen after the fall, but strong reverse. Same like the Eurodollar, in fact. Strong up, strong down to even the dollar yen even stronger in that regard. So sitting on the sidelines at the moment, I mean, if it breaks through this trend line again, the green trend line, I might consider that as a breakout, a continuation breakout. And this could then turn out to be a break, pullback, continue. But let's see if it holds. Let's see if price does not break this top first. All right, EURUSD made the turn here, as I said, then made indeed the bounce here as well. Couldn't break this bottom. So kind of like in a smaller triangle already, when you consider these two trend lines, the orange one and the green one. Ultimately, I think probably if I look at this chart, I think that the best opportunities are somewhere in this zone for a resistance and a potential downside. If price breaks above that zone, for whatever reason, then there is some space up to the next resistance level, which would probably be smooth here at 75 roughly. So there could be some breakout potential right there. But ultimately, I think that this zone looks like a resistance zone for at least a move down back to the support trend line, and could be a smaller swing trade when it gets up that high. That's probably the only trade I see at this moment on the EURUSD, and just triangle formation again on the EURUSD as well, similar to the Eurodollar and the dollar yen. There's a lot of indecision perhaps this week, and with the interest rate coming up this week, so definitely see some potential trades, but need more confirmation, I think, this week. I'll make updates, of course, on Tuesday and Wednesday as I have those trading webinars. We'll take a look at Admiral Markets in the social media and, of course, the content that's produced daily on the website with webinars and analysis. You can find a lot of information on admiralmarkets.com. Wish you good trading, many pips, and a happy week, and talk to you soon. Cheers.